What's going on, everybody? It's your boy Drew YQ. Welcome to another episode of Winners Win Finance. Make sure to hit the subscribe button and to smash the like button. Today we'll be talking about liabilities versus assets. Is your car and house a liability or is it an asset? Again, make sure to hit that like button, subscribe. This is a very important video. I know I've talked about this with my family, I've talked about this with my friends. And I think it's something that's very commonly, misconstrued in the industry. So without any further ado, make sure you hit that like button again and let's get right to the video. Alright guys, so first things first, let's go over assets versus liabilities. One of the many reasons why our middle class is hurting is because they consider their liabilities assets, aka their house or their car, right? Now, what is an asset and what is a liability? To understand this, we're going to be looking at our actual financial sheet here. Up above, we have the income statement, which is going to be the income versus the expenses. Below, we have the actual balance sheet, which is the assets versus the liabilities. Now, the definition of an asset is cash flow, money into your pocket. Meaning, this asset is generating income every month into our pocket, aka cash flow, baby. Now, a liability is exactly the opposite. It is taking money out of our pocket. So a liability is going directly to the expenses and then going to the garbage. No cash flow is being generated, meaning it is a liability. So if you take in, for example, your car or your house, that car or house, if you have a mortgage and you're paying rent every month, you're paying for insurance every month, it is not generating any income and it is therefore defined as a liability, right? Now, your car also, you're going to be having a car loan typically, and it's not going to be generating income every month, so it is also considered a liability. Now, this isn't where it ends, because this is where it gets fun, because you can turn your house or your car into an asset by generating income, aka a rental. Or now you can rent out your car via apps like Turo. Alright guys, so now that we know the definition of an asset is whenever it is providing that passive income into our pocket, and a liability is taking that money out of our pocket, we can now actually consider, is a car or a house an actual asset or a liability? When you think about your car or your house, you're usually going to have a car loan or a mortgage. And if you're paying your car loan or mortgage, that means it's taking money out of your pocket, making it a liability, right? It's not providing any income, no cash flow that we need to be able to define this car or this house as an asset. Now, this being said, you can still make your house or your car an asset. For example, renting out your house as a rental, or you can use Turo to rent out your car and turn it into an income generating asset, just like renting out your house as a rental property. Now, this same house could get trashed or something can happen to it and make it to a liability. So it might not be an asset forever. And that's what I'm trying to really stress here, is that an asset and a liability is not a forever thing. It can change. And it varies literally on, can you generate income and create an asset, right? Or is it taking money out of your pocket? Again, is it a liability? So think about it this way. If you lost your job today, how much cash flow keeps flowing in? That's from assets. And cash flowing out, that's from liabilities. So I'm not saying to never buy a house, but what I am saying is to actually understand the difference between an asset and a liability, and to not be naive and just assume your house and your car are assets because they might go up in value. They might go up in value, right? Now let's get into that. let's look at an example maybe from the real estate market in 2007 and 2008, so we can kind of understand how your house can really not be an asset and really hurt you. Alright guys, so now that we know what an asset and a liability is, let's take a look at the mindset between the poor, middle, and rich, and we can really kind of see how this kind of comes into play here. So if we look at the poor, the income for the poor goes straight to their expenses, they own nothing, and all their money goes straight into their expenses, right? So the middle class is going to be kind of similar. Their income equals their expenses, but they own a car and a house, usually a car loan and a mortgage, right? So if you own a car and a house, congratulations, you're middle class, you're doing well. I wish I could say that, but the middle class has actually been getting brutalized lately. Another thing about the middle class is a lot of their money is going to be going into their liabilities. Liabilities meaning their car payment and their house, right? So over here, like I said, the poor is going to be going, their income is just going to be going directly into their expenses since they don't own anything. Over here, the middle class will own a car and a house, so their money is going to be going into their car and house. Now also, the middle class pays all the taxes, right? Because the rich don't pay taxes. They have corporations, they have trusts, they have foundations, and for example, Bill and Hillary Clinton, you know? Ask them how much taxes they pay. All their money goes right into the Clinton Foundation, and with a foundation, you don't have to pay any taxes. And you know, the rich have been doing this for a long time when it comes to taxes. It's nothing new. It's just weird how, you know, this mindset is just so different in between this gap. And it's really, for me, it's just a lack of knowledge in a lot of cases, right? When it comes to the rich, their money is going straight into their assets, right? So any money that they get is going to be going into more real estate. It's going to go into their business, their corporations, and just going to continue to generate more and more passive income from their assets, so they can continue living off their passive income and living off their assets and just grow their wealth, right? Now, one other thing to think about when it comes to the rich is they like to control everything, own nothing. And what I mean by that is, for example, if you have your house and your car in your name, you go bankrupt, you lose your house and your car. But if you create an LLC or a business, put all of your assets maybe under your business name. If you go bankrupt or something happens, then all of your assets you will not lose because they're protected under your business's LLC, for example. Now this is something that's really huge for a lot of reasons. I don't think this is talked about enough. But yeah, when it comes to the rich, middle, and poor, this is something that's very fundamentally misunderstood, and I think it's very interesting, so I want to just kind of shed some light on this. I guess one of the best examples though when it comes to your house not being an asset is when you think about 2007, 2008, the real estate crash, right? We had a bunch of baby boomers, I think it was around, let's just say 1990. For a while, these baby boomers were making the market go up, so people just kind of assumed that the housing market was a great investment because it seems like every time you buy a house, the value was going to always increase, but that's not always the case, and that's what a lot of people in 2007 and 2008 learned. They learned very quickly that these houses can lose value and create a loss. And this loss is what caused many people to go bankrupt, and a lot of people, I think like Dave Ramsey, is even scarred from this crash. And this is essentially just from that misunderstanding of your house being an asset. Your house is not an asset. You can drop the value of that house and owe a lot of money very quickly. Alright, good deal guys. I think that's about it. If you have any questions, comments, please leave them below. Make sure to like and subscribe. And with that, boys, I'm going to go ahead and get some sleep. I think it's about 3 a.m. right now. I've been recording all night. I hope y'all enjoy these videos. And please make sure to follow on Instagram, Twitter. I try to drop as much content as I can. And with that, I'm going to go ahead and get out of here. Y'all have a good rest of y'all's week.